The housing market is showing more signs of mending from the depths of the foreclosure crisis. A new report from RealtyTrack finds banks are repossessing fewer homes than a year ago, and general foreclosure activity has declined for 22 consecutive months. Still, there was plenty of sobering news. The number of homes in July that received an initial notice of default, the first step in a foreclosure, was up 6% from a year ago, and nearly 60,000 homes are being repossessed by lenders each month. California has the highest foreclosure rate, with 1 in every 325 homes receiving a foreclosure notice last month. Guy Cecala watches all this closely as CEO and publisher of Inside Mortgage Finance, a housing industry research publication. Welcome to you.
Thank you, Jim.
So filings are down, continuing a trend. Explain that part of the equation. What's going on?
Well, filings are down basically means that we're seeing less people getting into trouble, and through job loss or basically an improving economy is helping the number of people flowing into the system. But we still have a lot of people who've been in the system for a while and are still facing foreclosure.
Before we get to that, so foreclosure action, I just want to understand what we mean by these, parse these numbers a little bit for us. What does that mean?
Well, there are a couple steps in the foreclosure. Obviously, first one is you go into default, and legally someone's got to file a default notice, usually the lender, on their behalf. And then the next thing they do is initiate a foreclosure. The final step that may take place a year later is actually evicting someone from a home and having a foreclosure sale. So there are many steps along that way.
Now, also, as you said, a big decline in the bank repossessions of houses. What's led to that?
I think there's been some improvement in the situation, in the marketplace that we're seeing in terms of foreclosures overall. The inventory of foreclosures is down. It's probably the lowest level we've seen in 3 years. In fact, the Mortgage Bankers Association released data today on that foreclosure inventory. So there are some improving signs. It's just that it's not across the board yet, and it's a huge problem. We're far from outside of the foreclosure crisis.
Well, explain the other part of the equation that came out. At the same time the filings are down, new foreclosures are up.
Yeah.
What does that mean?
That pretty much means that lenders, particularly in what we call judicial foreclosure states, the ones they have to go through court, are working through a backlog that built up last year due to pending litigation. The attorney generals in the United States were all banding together to go after some of the major servicers, and basically a lot of foreclosures were put on hold, or at least the final step of trying to sell off a property.
Yeah, bring us up to date on that, because we watched it carefully. There was the backlog, as you say, and a kind of stoppage, right? And then this settlement. So where does all that stand?
Well, theoretically, it's opened the door for servicers to proceed, but somewhat cautiously, in pursuing foreclosures now. And in some of the states, the ones with judicial foreclosures, we're starting to see action pick up, meaning more foreclosures. They're trying to work through the backlog. Right. But it's still a slow process.
So new ones increasing, but overall pool of people in foreclosure going down.
Exactly.
Okay.
We're still selling. The banks are doing a pretty good job in terms of selling the properties once they come out of foreclosure, too. And that's a sign of a healing housing market and the fact that there's more demand than there probably has been in 4 or 5 years.
Now, is this market, this is still a regional phenomenon, right? It totally depends where you are?
Exactly. It varies dramatically by region. I think, we've been closely watching what we call the sand states, parts of California, Nevada, Arizona, and Florida, because they were the hardest hit by the foreclosure crisis. And to some extent, they're showing the most immediate signs of improvement. We're starting to see some home prices actually move upward in those areas.
Are there still some, you say California, but California, as we said, still has the most.
It is. And California is like...
Because of the depth of the problem.
It is. It's the largest state in terms of people, mortgages, and everything else. It's also like 3 different regions. Like San Diego is very different than the San Francisco housing market. So it's hard to make some generalities about a state that size.
And what about regions or states that are still really stuck and still really mired?
Well, there's some states like Michigan, Ohio, that never really had a housing boom, and we still don't see any recovery. They basically just had the housing bust part of it.
What about other signs that you look at for the health of the sector overall? I saw Fannie Mae, Freddie Mac showed a profit this week. What does that tell you?
Well, that's very interesting because they're kind of a barometer of the health of the housing market and the mortgage market, since they've been posting, literally billions of dollars of loss. Taxpayers have paid something like $142 billion into those companies.
That's why I noted the profit.
Because of the losses they've taken, and a lot of it has to do with the fact that not only have they had mortgages go bad and they've had to repossess the properties, but when they've had to turn around and sell them, they've sold them at much less than the value of the property was originally. And both of those things are improving. They're selling more properties at higher prices, and they're seeing less loans go bad.
All right, Guy Cecala on the housing market. Thanks so much.
Thank you.